Hey folks, welcome to the Trader Hot Seat. If you are new to trading and trying to find your footing, perhaps you're trying to learn about indicators, which ones to use, which ones you want to put on your chart, how they work, you've come to the right place, because today we are backtesting the backtesters, insert air quotes. Now, surely you are familiar with these sorts of YouTube traders. They do make some pretty wild claims. For instance, RSI, easy scalping, better than RSI divergent scalping strategy. I feel like I'm buying something from AliExpress. RSI 90% winning, mind-blowing signals. Okay. $1 million strategy, simple as this. You sell the high and buy the low, $500. This crypto day trading strategy made me a millionaire, he says. I'm sure that video did make you a millionaire. You know what? We can even open up a new window. Let's try this and see what we get. Hike and Ashy strategy, too easy, 250, 250, 250. Simple, right? Well, and this one too. 99% of traders don't know about this secret tool, tested 100 times. We will see about that. So, it does sound a little too good to be true, don't you think? We're about to find out. Who is in the Trader Hot Seat today? Well, I found this one just a few minutes ago. It is from Quantum Trading Strategy. It is his magic strategy. And it is the most profitable. This one right here, 167,000 views. Most profitable indicator, 1 minute scalping strategy. And this is for Forex or Bitcoin. So let me get this set up on TradingView right quick, and we will run through the indicator setup and any entry and exit conditions together. We've made it to TradingView.com on a totally clean chart. This is the 5 minute, but this strategy is supposed to work on the 1 minute, 5, 15, and the hour. Anyway, let's get these indicators figured out. We will head up to the top, click Indicators, and in the search box here, search for SSL channel. It's the top one here by Erwin Beckers. We'll apply that and head over to the settings by clicking the cogwheel and change the input for both periods to 13. Next, head over to Style, and for my white chart here with the white background, I will be using a purple top, and on the bottom, maybe orange. And of course, on a dark chart, maybe something brighter like white or yellow. Next, we'll head back to the Indicators tab and search for CCI. This is the Commodity Channel Index. Once we have that applied, we will click the cogwheel to open the settings, click the Inputs tab, and change the length to 40. Next, we'll head over to Style and change these bands to whichever color you would like. I'll go ahead and use the red for the upper band and green for the lower. I'm also going to turn these into lines instead of the dashed lines. And I'm also going to switch this background to maybe a light gray, just a little bit easier to see on the white chart. Let's move into the long conditions. The first is that we are looking for an SSL channel crossover. The bottom orange line must cross above the top purple line. And once this occurs, the CCI blue line must then cross above the bottom green line, or at least within a very short frame of time prior. And we can see that occur here, where we have the bottom orange line crossing above the purple and a CCI cross above the bottom green line. We'd be able to enter a trade here on the close of this candle with a stop just below the previous low. And we do not target a specific risk to reward ratio. Instead, we're going to let this play out until the orange line crosses below the purple. We would exit our trade right here. So it would be a 0.5. If we're risking $100, this would be a $50 reward. Like so. Next, on to the short conditions, we'll be looking for the SSL channel crossover. This is, of course, just the opposite of the long entry condition. The bottom purple line must cross above the top orange. And once that occurs, or at least within a very short span of time prior, we'll be looking for that CCI blue line here to cross below the top red line. And pardon the trading view lag, we do have an entry condition right here for a short. We would enter on the close of this candle with the stop going just above the prior swing high. No profit target. We'll be waiting to see now the orange line to cross back above the top purple line. Okay, we have that here. And to determine what sort of loss this would be, I'll be taking this open P&L number, this 91.10. We will take the absolute value of that, multiply it by 100. So we would have 9,110. And we will then divide that by the stop up here, which is 312.60. That gives us a roughly $29 loss. So we can go ahead and mark that up. And there we have it. Now, after watching Quantum Trading Strategies' video, he's made some very impressive claims. The old adage says everyone's a genius in a bull market, especially the case in a strong trending market. The biggest issue with any of these indicators are false signals, of course, and those false signals occur with the most regularity during sideways, ranging price action. It's where most of these indicators I test are going to fail, and I say that with absolute confidence. Quantum, however, has claimed that this strategy is impervious to ranging markets, so for the second time, I'll say it again, sounds too good to be true. But that's why I'm here to backtest the backtesters. We're simulating a non-compounding account with a $10,000 starting balance. Each trade will be risking $100, and for the record, you should be risking a percentage of your account, not a fixed number. That way your winners will compound your account growth. The danger is that with a terrible strategy, your losers will also compound your losses, and it will make account growth that much slower and harder. This is BTC to USD 5-minute. Quantum Trading Strategy is in the trader hot seat. Let's go. Well, the results are in, you know the drill. Drum roll, please. 40 winners, 60 losers. Might be noticing a pattern here. Trading a non-compounding account, risking $100 per trade, we have an overall gain of just 351. These 100 trades took place over the course of 11 days and 5 hours. Now, had this been a compounding account where you were risking 1% and not a fixed amount per trade, how would you have turned out? Well, between the consecutive losses, spreads, broker fees, the average winning trade was $78. The average losing trade was $61, meaning you're essentially working at a 1-to-1 risk to reward. If it weren't for a couple of large winners, the largest being 332, this would have been a losing strategy even on a non-compounding account. That's not good. At best, we had 5 consecutive winners, and at worst, 5 consecutive losers. That'd be an awful 11 days sitting in front of your monitor. Let me tell you, the few hours I spent running this backtest were bad enough. If it were the strategy or nothing else, I would opt for scavenging spare change and Coke cans on the side of the interstate, but hey, to each their own. So then, who would you like to see next in the trader hot seat? Which strategies would you like me to test? And do you have any faith in this strategy after seeing these results? Do you think maybe it just needs a few tweaks? I think you know my thoughts, but let me know yours in the comments below. Oh, and before you take off, make sure to leave a subscribe, leave a like as well if you find this content useful. It means more than you know. Until next time, take care. We'll see you soon.